the number one and number two winners in food delivery in the United States, just got a hell of a lot more complicated. It is peculiar why Uber did not snatch this up. The competitive breakdown, market share breakdown, is the same. Now you just have a merged entity between Grubhub and Just Eat's kind of two equals, just, sharing the same stock now.
Just Eat TKWY.AS, technically their full name, is buying Grubhub for $7.3 billion. This is an all-stock deal. No cash being exchanged here. Very interesting deal. If you remember a few weeks ago, there was rumors that Uber was going to acquire Grubhub. And I was pretty positive on that conceptually. Obviously, everything depends on the numbers. It is peculiar why Uber did not snatch this up and why Just Eat got it instead. Let's try and dig into why this happened here. What is Just Eat? Let's start there. Just Eat is kind of like the Grubhub of Europe. These companies are roughly similar in size from a GMV and transaction volume standpoint, from a valuation standpoint. They're roughly similar in size. So you have kind of two peers, but on two separate continents. And so there really aren't any synergies with this deal. Maybe they would argue there are some, but they're going to be minuscule at best. You basically have two businesses operating independently, one in the US and one in Europe. And now they are the same company. And maybe, Grubhub went this way just because they were offering a better deal. Maybe Grubhub had a grudge against Uber. I think the price tag that Just Eat is paying for Grubhub is more than what Uber was willing to pay, and outside of the fact that Uber didn't buy Grubhub, here's why I think that. This was interesting. So I was on LinkedIn. Here's this guy, Niklas. Oh, this guy is the CEO of Delivery Hero. Delivery Hero is the dominant food delivery platform in Europe. They're bigger than Just Eat. So look at his message here. Just Eat is acquiring Grubhub. Combined 2 million orders per day. ! Almost half of Delivery Hero. So some passive aggressive shade from Niklas here to the Just Eat and Grubhub team. Now, they're doing double the throughput, double the GMV, double the order volume of the combined entity, right? He's not saying individually. Combined 2 million orders per day. So he's saying Delivery Hero is doing about 4 million orders per day. Grubhub plus Just Eat is still half of Delivery Hero. So if you do the math, right, Grubhub is effectively 1/4 from a volume standpoint, the size of Delivery Hero. Which, if you were to just do bare numbers like that, that means they should be worth $4 billion, not $7.3 billion. Pretty big difference, especially considering there's no, again, synergy, right? Like Uber and Grubhub, you get synergy. What do I mean by synergy? So this says Uber Eats had 23% market share. Grubhub had 23% market share. DoorDash 45%, right? So we had similarly heard in the United States that DoorDash was the number one player, roughly double the second player, which was kind of Uber, and Grubhub tied. So then, conceptually it makes sense. Basically, the two companies tied at number two and three, Uber and Grubhub combined. Now they are a viable combined competitor. They're roughly the same now, parity as DoorDash, right? It makes sense. When you actually look at it even closer, they break it out by cities here. So Grubhub is the blue, DoorDash is orange, Uber Eats is red, and Postmates is the inconsequential green, except for in LA. So if you look at the markets where Grubhub is strongest, it actually is seemingly the markets where Uber Eats is also weakest. So that's what I'm talking about, synergies, right? Two combined entities. Now you have the dominant player in a lot of these key markets, right? Like Atlanta, Uber Eats has 40%, Grubhub had 11, combined would be 51, DoorDash has 42. Now they become the biggest player where DoorDash was previously number one. Phoenix, 15% Grubhub, 25% Uber Eats, DoorDash 43%. Combined, they're at 40%. DoorDash is at 43%. Parity. Much more even level playing field to compete, right? In other markets, they would make it even more lopsided to be the clear winner against DoorDash, like say New York City with Grubhub at 53% market share, Uber Eats at 20%, right? 73% market share in New York City compared to DoorDash at 23%. That's going to make it much easier for you to now cram DoorDash down. And, can you cram DoorDash down to 20% or 15% market share because you just have so much strength in that city? It also gets back to the point of economics. So if we look at Grubhub's economics, you rewind the clock to Q2 of last year, Grubhub was a profitable business. I mean, look at this. They're roughly break even here, $8 million on $325 million of revenue. You go to Q3 of last year, they're making $5 million in profit. Now they go negative. This is Q4 of 2019. Bam, losing $20 million. This is now Q1 of 2020, losing $33 million. So you can see their losses were increasing. They were a profitable company, but the DoorDash and Uber Eats of the world were stealing margin and market share away from Grubhub's model, which had been operating profitably. We've spoken about on past episodes why this is. In short, it's because Grubhub is a two-sided marketplace primarily. They don't do the delivery. They let the restaurant do the delivery, whereas Uber Eats and DoorDash, it's actually a three-sided marketplace. They handle the delivery, which gets into a whole bunch of other dynamics around supply and scale and these kinds of things. Long story short, those two companies, DoorDash and Uber Eats, are the aggressors. They've been stealing market share, stealing and forcing Grubhub to compete and to actually try to change their model, eviscerate their profitability. Now here we are where it's not sustainable. The industry needs to consolidate. DoorDash and Uber Eats are not profitable either by any means. They're actually losing way more money than $100 million a year if that's what Grubhub is on pace to do here. So Grubhub was still burning the least amount of cash coming out of that kind of two-sided model versus the three-sided model. So again, lots of interesting dynamics here between the Uber and Grubhub that were very clear to me. The Just Eat's Grubhub, much less clear. Now you still have three players. This competitive chart, it actually stays the same. They're still all competitors. They still all own kind of split a third of the market overall. The competitive breakdown, market share breakdown is the same. Now you just have them owned by and basically a merged entity between Grubhub and Just Eat's, kind of two equals just, sharing the same stock now, basically. So it's very peculiar. The exit path, and how you have some sort of consolidation and who kind of is the number one and number two winners in food delivery in the United States just got a hell of a lot more complicated. Maybe the naysayers would say that now Uber could swallow up Just Eat because Just Eat overpaid, which I think is a valid argument. Again, just going back to the Delivery Hero, $17 billion valuation, $7 billion for Grubhub, which is a fourth of the volume of Delivery Hero. I'm oversimplifying it, but you get the point. I think there's a fair argument to say that Grubhub was overvalued at $7.3 billion. If we look at Grubhub stock, a year ago in July of 19, when I was saying that they still weren't losing a bunch of money, they were roughly at that $7 billion valuation. That's a Grubhub that is still break even and slightly positive, slightly profitable, and not losing money. You can see how their stock price has declined as they've started to lose money, as they've started to recognize that they need to change their business model to adequately compete against Uber Eats and DoorDash in the United States. So nothing here materially has changed in terms of how Grubhub is going to successfully compete against those two companies. So it's still kind of back to more of the same in terms of how is Matt Maloney, CEO of Grubhub, going to compete? And there's really no new information here. There's just less information about M&A activity and consolidation because the consolidation didn't happen. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.